Coinbase's chief investment officer just announced that several Middle Eastern countries are going to be disclosing large Bitcoin treasury purchases. Is this going to break Bitcoin out of its sleepy sideways price action? Gold already broke out, breaking out over $3,500 an ounce and hitting all-time highs. Gold is by far and away the best performing asset in the world this year, even beating Bitcoin. And silver just broke out for the first time over $40 an ounce since 2011, producing an average return of 2% per year for the past decade. Boomers have been waiting their whole lives to do the silver jig.
Automatic, supersonic, hypnotic, funky, fresh.
Meanwhile, the dollar's strength as a global reserve asset is dwindling. Are we crossing back into the sound money era? Has the US government lost all of its goodwill around the globe? What does this rally in gold mean for Bitcoin? Let's find out. This is Dante Cook with Bitcoin Simply. Let's go.
You've got these large pools of capital that look around and say, well, God, am I really going to buy, Bitcoin at 100,000 or 110 or 115 or 120? And even if it goes back to 85, it's like they just can't, they haven't been able to do it, but they can go out and buy a stock. And so that's the type of thing that I think you're seeing. They've put money into VCs, but they haven't really come in. So I think that they will, but this to me, this is exciting. It's like, that is exciting. You want a market where you can look out a couple of years and say, yeah, I know who's going to be buying this stuff from me in a few years' time at what I think will be substantially higher prices. You want to know who that is. If the answer is you don't really know, you should probably be thinking about selling right now, But there are plenty of people who I think will be buying at higher prices. But they'll first make bigger and bigger investments in infrastructure. And maybe in the end, maybe they won't hold huge amounts of these tokens. I think that they at least some of them will. And it is possible that crypto to a degree becomes part of some new monetary standard. Not that Bitcoin takes over the dollar, but that it's possible. You see the US talking about a strategic digital asset or Bitcoin reserve, and there certainly are countries around the world in the Middle East who've made large investments that are probably bigger than the ones that they've disclosed. And so it's possible that there even do become some monetary standards that are at least in part backed by crypto, just like they might be backed by gold or other commodities. And so there could be narratives out there. I think there probably will be narratives that will ultimately suck some of these big players in at higher prices.
Did you hear that? This is massive news. Financial markets as we know them, or as we've known them since 1971, are experiencing disruption. Foreign countries no longer trust the full faith and credit of the United States and the United States government. And they're making moves in their assets, their long-term strategic assets, and buying assets like Bitcoin, which have rules without rulers to back their sovereign treasury reserves. But let's face it, more than Bitcoin, they're buying gold, which has been the OG on the block for the past 5,000 years. And they're gobbling that up too.
Preeminent reserve asset from, call it 1973 to 2018 was long-term treasury bonds. And that was the reserve asset that gold competed with. And so if gold goes up against long-term treasury bonds, gold is winning. And if gold goes down against long-term treasury bonds, gold's losing. Gold is won by knockout. It's over. It's over. Like it is like throw in the towel. He's going to kill him. It's over. So gold has already defeated long-term treasury bonds as the primary global reserve asset over the last 10, 11 years. Again, central banks have not bought a treasury on net in 11 years, and they bought $1 trillion worth of gold, and they continue to buy gold, and they continue to not buy treasuries. I think that is they're telling us which way the system is going, which is multi-currency energy pricing, right? So the Chinese can buy the marginal ton of oil in yuan, and then they can settle any offshore balances in yuan in Chinese goods, and anything left over gets settled into gold. And they have quietly but very efficiently set up a system where the Chinese capital account is open on a very limited basis through gold. And, if you have oil being priced in multiple currencies, and one of them is net settling in gold, then gold becomes the de facto oil currency.
Gold has been the best performing asset in the world this year. And it's been up 83% since 2020 and up over 70% since the beginning of 2024. Sometimes the old man got to roll up on the young boys and show them he still got it. back to the signal. Gold is signaling something very important to us, and we need to pay attention. If you were watching the past show, we showed you this chart where gold actually passed U.S. Treasuries as a percentage of foreign reserves for the first time in 30 years. And the dollar continues to lose its status in global international reserves. And long rates, or long-term borrowing percentages, continue to rise as the dollar weakens. And because this show is Bitcoin Simply, I want to explain this simply. People are requiring that they get paid more money because U.S. debt is more risky for the longer that they hold these notes. And the dollar is getting weaker relative to other currencies. This is a basket of calamity for people like Scott Bessent in the United States government. But gold is having its time in the sun, and people like Peter Schiff will continually selectively select times where it's advantageous to post how gold is outperforming Bitcoin, saying that Bitcoin is poised to go much lower from 108. It's already back at 109. Bitcoin is up 977% since 2020 versus 83% for gold. And gold, even being on this historic run, is only up half of the return that Bitcoin has produced in the last 12 months. But nonetheless, gold does sniff uncertainty. And the correlation between gold and Bitcoin is nothing new. When Bitcoin runs, it typically runs 60 to 90 days after gold. The Smart Money told us about this trade last October. Listen to this clip from Paul Tudor Jones on Squawk Box, where he says all roads lead to inflation.
Given all of the things you're saying, are you off buying gold and Bitcoin? And
I think all roads lead to inflation. We're going to end up
but does all roads lead to inflation? Therefore, gold is a good investment. Is Bitcoin a good investment to you?
I'm long gold. I'm long Bitcoin. I think commodities are so ridiculously underowned. So I'm long commodities. I think most young people find their inflation hedges via the NASDAQ. That's also been great. It's probably some combination. I'd probably have some basket of gold, Bitcoin, commodities, and NASDAQ, something like that. And I would own zero fixed income. If I had my cash, it'd be very short term. The playbook to get out of this, you see it in Japan right now. They have 2% inflation, 30 basis points overnight. They don't want to raise rates. The playbook to get out of this is that you inflate your way out.
In a world where there is inflation and there's money printing in order to try to correct the mistakes of the past, the best thing to own is the scarcest asset. And the last time that I checked, Bitcoin is still the scarcest asset in the world. And that's why smart money like Eric Simler, people from Simler Scientific, are stacking Bitcoin because they believe it's undervalued relative to gold.
We really buy into that. So we want to own a lot of digital real estate. And we think it's really important to do that now because Bitcoin, we believe, is incredibly undervalued relative to gold and is worth more than gold, we believe. So we should be aggressively purchasing Bitcoin on that thesis.
Are you buying digital real estate at 1/10 of gold's value? If you are, don't sell your real estate. Don't sell your digital real estate. Ledn has been the leader in Bitcoin-backed loans since 2018, and they allow you to just take a piece of your digital real estate and unlock liquidity in it, like a home equity line of credit. Except they do that with Bitcoin, the leader in Bitcoin-backed loans. They've issued over $9 billion worth of loans to tens of thousands of customers all across the world. The application takes less than just 2 minutes. They have a digital proof of reserves, which says they have the Bitcoin, which they say they do, and they issue fiat into your account in less than 6 hours. Don't hesitate. Go to learn.ledn.ao/simply to get started. Loans start at just 12.4%, but you get 0.25% off of your first loan by going to the URL learn.ledn.ao/simply. The Bitcoin way allows you to have even more sovereignty than gold, because gold is something that you cannot take with you when you cross a border. Bitcoin allows you to be even more sovereign than people who own gold, because try crossing the border with your gold bars and see if they aren't confiscated. Bitcoin allows you to have true self-sovereignty, sovereignty backed by mathematics that can't be broken with a wrench. Learn how to protect your Bitcoin the right way by scheduling a free 30-minute consultation with the Bitcoin Way team. Members of their team will walk you through why Bitcoin is a more sovereign asset than gold. Schedule a free 30-minute consultation with their team at thebitcoinway.com/simplybitcoin. In the AI-driven future, jobs like healthcare administration, education administration, cashiers, data entry, translators, all going to be wiped out by AI. And this is the classic signs of the fourth turning. The disruption happens at the bottom, and then it moves to the middle. And then the pitchfork comes for the people at the top. And the government isn't going to just allow this to happen. They're going to continue to kick the can down the road. And when that happens, they're going to paper over their mistakes versus admitting their mistakes and moving to a sound money system.
And the problem is that this gets back to the fourth turning of like elite overproduction. You went to college. You've got $100,000 in student loans. You're a healthcare administrator. You've got a mortgage. You've got kids in school. You've got 2 car loans. You got a credit card. And now AI just took your job and his job and her job and their job. What do? You stop paying on your mortgage. You have to. I saw this in the Rust Belt when we sent the jobs to China. It's no different than sending the jobs to China. Then what do? Well, they going to let the banks fail? They going to let these consumer credit card companies fail? Because they just have a sliver of equity. Well, guess what the banks hold as their equity to sell for loan losses? It's Treasury bonds. So now we're going to have a recession where employment's going up and rates are going up. So the U.S. government's receipts are going down and their interest is going up. So paradoxically, to me, I don't know on AI. To me, it's two things are very obvious, in my opinion. At the low end and into the medium end of white collar, it's going to be extremely disruptive and deflationary to wages. And we're in a highly leveraged system where everybody's got a loan on something and they will not be able to pay it. And so when that happens, the authorities are going to be right back to 2008, print the money or let the system fail. And for my gold holdings, my Bitcoin holdings, I don't care either way. I win either way. And that's why I sort of, I've really been harping around AI. Like, I'm not smart enough to know the technological stuff about what it will do, but I can see what it's doing. And I have this unique ability for whatever reason. I see the exponential function happen better than most humans. I don't know why. And I can't tell you exactly where it is, but I can just see what's happening and say, oh my God, that's a huge problem because there's going to be second and third and fourth derivative daisy chain events.
And in this world, in this reality, both gold and Bitcoin win. Gold is going to win moving forward. Bitcoin is going to win moving forward. Commodities are going to win moving forward. Energy and scarce energy assets, I believe, will continue to win moving forward. And that's because you can't print more of them. As they print into hard and scarce assets, well, the world is going to continue to need them. So you should own them before everyone else comes to gobble them up first. And it's too expensive. It's a pretty simple trade. Don't overcomplicate the trade. This is Dante Cook with Bitcoin Simply. Oh, and before you go, continue to invest in your education by going to conferences like the Mining Disrupt Conference, the largest Bitcoin mining expo conference in the world, happening in Dallas, Texas from November 11th through November 13th. Get 20% off your tickets by using the promo code SimplyBitcoin at checkout. Thanks for watching the show today. Happy stacking.